I've got a simple 3-step formula that I've tested thousands of times. And every single month I ran this strategy. Over the long term, it came out profitable. No fancy indicators. No complicated chart patterns. Just pure price action, baby. And by the end of this video, you'll know exactly how to use it. You'll be able to take smart, calculated trades, just like this one, and potentially make serious returns. Let's not waste any time. Step 1 is all about understanding market structure. Now listen carefully, because this is one of the most important parts of the entire system. If you mess up even a little bit here, the whole strategy can fall apart. You've probably already learned the basics. An uptrend is when the market forms higher highs and higher lows. A downtrend is when you get lower lows and lower highs. Simple, right? You might be thinking, yeah, I already know that. But what if I told you? You've probably been reading it wrong this entire time. Let me break it down. Let's say we've got a chart moving upward. It's making clear higher highs and higher lows. So far, so good. Classic uptrend. But then suddenly, price starts dropping. It forms a new low and breaks beneath a previous low. This is exactly where most traders mess up. They see that break, and they assume the uptrend is over. So they flip their bias and start looking for sell trades. But here's the twist. That low isn't even a real low. Let me explain. In order for a low to be valid in this strategy, it must break the previous high. If it doesn't, it's not a confirmed structural low. So if price drops and forms a low, but didn't break the last high before that, then that low is invalid. Which means we're still in an uptrend. This is the part most beginners overlook. But once you understand this rule, everything becomes clearer. So again, a valid low happens only after it breaks the previous high. If it doesn't break a previous high, don't count it. That's your foundation. So let's recap. We're in an uptrend as long as price doesn't break the last valid low. It can go sideways, dip a bit, even fake out. But unless it breaks that confirmed low, we're still bullish. Now, if price does break that valid low, then yes, that's your shift. That's when we start looking for short setups. So to wrap up step 1, we determine the trend by using confirmed highs and lows, not just whatever looks like a peak or dip. Once you can read structure this way, you're already ahead of 90% of traders. Step 2 is all about spotting supply and demand zones. This is where we actually plan our entries. In simple terms, demand zones happen in uptrends. That's where we want to buy. Supply zones happen in downtrends. That's where we want to sell. Let's talk about demand first. Imagine price has been rising steadily. We look back and see a sharp move upward from a certain area. That strong move tells us buyers stepped in big time at that zone. So what do? We mark that area. Because when price comes back to that level, there's a good chance buyers will react again. The same logic works in reverse for supply zones. If price drops sharply from a certain point, that means sellers took control there. So if price ever returns to that level, we're looking for it to drop again. Supply and demand zones are the core of this strategy. But let's put it to the test on a real chart. Let's say price is in an uptrend. It formed higher highs, higher lows, and broke previous highs, confirming each move. So we're only looking for buy setups. No shorts. Don't fight the trend. Now we find our demand zone. Look for an area where price paused, maybe moved sideways for a bit, before shooting upward. That zone shows us where buyers stepped in. Here's how to mark it. Grab your rectangle tool. Highlight the last candle before that strong move upward. Draw your box from the candle's low to its high. Boom. That's your demand zone. Now we wait for price to come back to it. Once it does, we enter a long position. Set your stop loss just below the zone and place your take profit at the recent highs. That's it. You've got a clean, smart, low-risk setup. Let me show you how this plays out in a downtrend too. Now price is making lower highs and lower lows. Clear downtrend. This time, we're marking supply zones. Look for areas where price dropped hard. Find the last candle before that move. Mark the high and low of that candle. That's your supply zone. Wait for price to come back up to it. Then enter a short position. Set your stop loss above the supply zone and set your take profit at the recent low. Boom, another winning trade. And guess what? You can repeat this process again and again. Every time price forms a new high or low that confirms structure. Mark the new supply or demand zone. Wait for price to return. Enter. Manage your risk. Take profit. That's how you stack high probability trades over time. Now we're on the final part. Step 3. Managing risk to reward. Here's the deal. Even if your setup checks every box, if the risk to reward ratio is too low, don't take the trade. We only want to enter trades that have a minimum risk to reward of 2.5 to 1. That means, for every $100 you risk, your target should be at least $250. This rule alone will keep you profitable, even if you lose a few trades along the way. Let's walk through one last example. Price is in an uptrend. We've confirmed higher highs and higher lows. We found a clean demand zone from a previous consolidation. Price returns to that zone. We enter. Set stop loss just below the zone. Target the most recent high. Now we check our risk to reward. It's 3 to 1. Perfect. Take the trade. But if it's under 2.5, even if it looks amazing, skip it. Discipline is what makes this strategy work long-term. So let's recap the full strategy. Step 1. Identify the trend using valid highs and lows. Step 2. Mark your supply or demand zones based on trend direction. Step 3. Only take trades with a risk to reward of 2.5 to 1 or better. That's it. No indicators, no guessing. Just clean price action. Stick to this formula. Be patient and let the trades come to you. Now that you've seen the full breakdown, it's your turn to try it on your charts. Happy trading.